the last 2 weeks. Anyway, so attention remains on the Ukrainian war, but also we have central banks. Let's not forget that anyway, because next week you should also shift your attention to Fed, Bank of England, and Bank of Japan. We have already published our events, events to look out for next week. So highlighting all the important events for the week ahead. But in the meantime, let's focus on today's trading, what is really where we are standing, and feel free to ask anything you want. I will be here to help you with any technical and fundamental analysis that you might need help with. So, okay, here I've put the charts on as well. Just a quick briefing until I have your questions and until the data are out. Actually, we are waiting for the employment data out of Canada, and also Michigan. If we manage to see also Michigan consumer sentiment as well, would be brilliant. So, but this actually is in an hour and 40 minutes, so I'm not sure whether I will be still here. But yeah, 11 minutes to go until the employment data from Canada. In the meantime, until the data are out, let me do a quick briefing. So I have put on stocks. This is the EU 50. Also here we have a Nasdaq, etc. So I'm starting with stocks because we had since morning we have seen actually stock market a bit slightly lower, actually solidly higher, we could say. So not sure we have whether I have FTSE and DAX over here, but I do have EU 50, Nasdaq, and S&P 500. All appreciate. You can see US 500 boosted to the upside at 43.36 level. So extending that boost that we have seen on Wednesday, even though overall the sentiment remains negative, fails to break the 20-day moving average. So this might be just a correction following some reports earlier from the Russian president, putting that he sees certain positive developments on the negotiation talks in Turkey. So this might be something that has boosted further or improved a bit, not boosted, improved a bit the sentiment after a pretty negative session yesterday in the global equity market. So yesterday we had the inflation of US at 40 years peak. We had ECB, which actually removed its stance from hawkish side. So that actually is something that caused a pressure on the stock markets, on the global stock markets yesterday on the US Open. So we've seen a recovery so far today, as you can see. The same stands for the European stock market as well. DAX to the upside, FTSE to the upside. Let me just try to bring those on as well. So here we are. So here's FTSE, DAX. Okay, reached 14.19 level, breaking yesterday's actually breaking 2 days high, but that, guys, I mean, that's solely near term. Okay, what I'm just presenting is the appreciation and the boost that the stock markets have seen so far today. The overall picture on the back with the Ukrainian war in the background, inflation as well on the background, keeps the stock markets under pressure. So something that also might has boosted a bit the European markets today is some comments from ECB officials with regards to an increased flexibility on rate hikes. So that's something that supported also the yields, the European yields as well. So flexibility in crisis situation such as this one. Let's not forget that the one that could have an immediate impact from the Ukrainian war will be Europe and its dependency from the Russian oil as well. So other than that, let me scan a bit. So what's the time? We have another 7 minutes to go until the data. So also something that I also wanted to highlight um, is that it is expected that other than the central bank next week, volatility is expected to remain high as the focus remains on any kind of news that we might have on the negotiations in Turkey and in general on the Ukrainian Russian front. So you are aware already that this situation it was responsible for the boost of commodities, safe haven assets, and all this risk on risk off mode that we are facing the last few weeks, as I already mentioned. So let me just come through. Okay, gold, dollar CAD, Aussie CAD, euro dollar. Okay, questions started already. I will start. I will take like a first come first serve. So dollar yen. Yes, thank you for reminding me that actually. Because I missed mentioning that dollar yen has spiked to 5 years highs so far. So it's back to 1.6. As well as it has been boosted significantly. We have seen a big aggressive breakout of this key 116 36 resistance level. This was a double top so far this year. But if I just put the monthly chart on, you can understand this is the monthly chart. You can understand that is a resistance area that hasn't been seen, hasn't been broken since January 2017. So yen has been in an aggressive boost. And as I said, this has to do on yesterday's and so far today's risk of conditions that we're facing. In the near term, we're seeing a bit of a pullback. However, the momentum of dollar yen remains strongly positive. You can see the momentum indicators as well. We have 1, 2, 3, 4, 5 daily bullish candles, and you can see that the body of the candle presents how strong this move is. So if you're asking me in regards to the intraday, so overall you can see that breakout, the fact that the daily Bollinger is expanding higher, MACD also increasing higher, RSI further pointing higher. It's already 66, but that is further into the upside. All these present that there is strong positive momentum in the medium term for dollar yen. Intraday, however, I will say that the same thing stands intraday as well, because this reversal lower, this 1, 2, 3, 4, at the last 5 hours with small body candles, doji candles, implies that it's just looking for a correction because momentum is still strong. So this looks just a correction, a bit of a pullback before another possible attempt to the upside. So dear forex trader, I don't know your name unfortunately. This looks to be a correction unless if we see the asset turning back to covering at least the 15% of yesterday's move, or actually of the so far move at 116.40. So only a breach and a break below that level could revert the overall positive picture out of dollar yen. So okay, 2 minutes to go. Let me see your questions as well. So anyway, the risk on remains in play. Okay, as long as the diplomatic progress, as long as we have this diplomatic progress in Turkey going on, and if we consider that in 2 hours' time, Biden will have a speech in regards to tighter sanctions in Russia, to Russia, sorry, then all this anticipation and also the announcement of possibly tighter sanctions could add to this risk on mode. And if this is if this happens, this is something that tends um, um, to affect safe haven assets such as dollar yen. So have this in mind. Okay. Let me so. Okay. How do you weigh up on gold given Putin's remark? Okay. Let's have a look. Okay. Bizarre, not actually bizarrely, but let's not forget that gold is an asset that is inflation sensitive. That's why we have seen this a bit of a muted, not muted, a bit of okay, let me just clear a bit this. A lot of lines over here. So that's why we have seen it settled and remain at should be at the lows of the week uh, since yesterday. So have in mind that the higher inflation that we are seeing, actually the really high inflation that we have seen yesterday in the US, it was the main driver since yesterday of gold rather than the actual geopolitics, because you mentioned Putin's remarks. So um, so it was the inflation rather than any headlines in regards to geopolitics, because high inflation implies that the Fed, and the fact that inflation was at 40 years highs, uh, has actually increased the expectations for a more aggressive Fed. So now, and we had also comments from FOMC officials stating that 100 points rate hike is needed by July. So initially, for the year ahead, the expectations were that the Fed will proceed with 75 points by the year end. Now, with the inflation as high as 40 years, we are seeing that those are actually turning to 100 points, and by the mid of the year and not the end of the year. So that's why we have seen the gold sustaining. So let me just put the 4-hour chart. Consolidating since yesterday at the low territory of the past week. Now, just before the European, the sorry, just prior of the US of Open, we have seen it turning down. Okay, so that three candles lower, you see these negative candles there, Diniso, it was due to the possibly due to the Putin's remarks in regards to positive development in the negotiations. So it's providing some kind of a positive. It has turned a bit the market into a more positive mode, and that explains that decline on the safe haven gold. But you can see that the overall picture doesn't really change. Okay, the trend, the gold trend, has been really strong since the end of January. So even though, okay, here we are. Let me change a bit. Let me put my actual data out as well. So I'll finish with gold, and we can see the data as well. So the momentum is still strong. The positive momentum is still strong on gold. So the near-term outlook hasn't really changed, as long as we don't see gold breaking the at least the 1940 territory, okay? Somewhere like a recovery of nearly 40% of the, sorry, a pullback around 40% of the gains that we have seen the whole year. Theoretically, though, in the long term, I mean, for the whole year, for 2022, the gold is expected to turn lower. And why is that? Is because of the Fed, because of the rate hikes, okay? But what drove the gold to the upside? It was the situation with Russia and Ukraine. So, if indeed the positive developments in negotiations continue, then yes, theoretically we could see the gold losing its bullish pressure and turning lower. But we cannot really be sure about it. The negotiations are still on. Biden will be I was speaking in 2 hours, and so far it was expected that he will possibly announce further sanctions. So that cannot be a positive development. And after all, as you informed me earlier, actually, even though Mr. Putin stated that there is a positive development, however, Reuters, for example, reports that Russian forces are coming from the Middle East to volunteer as volunteering fighters to the Ukrainian front. So very mixed signals from the negotiations, stating about positive development, but on the other side, having seen that he reinforces his army in Ukraine. So yeah, we need to wait and see, I'm afraid. But yeah, if this war end anytime soon, or they figure out a solution in a diplomatic way, then gold could lose um, its appreciation. Okay. Now, let's see the data, and I will come back to you with, and I will check your questions once we see the data because they are already out. So pretty positive. Oh, really positive report actually. That's why that explains also the fact why Canadian dollar is appreciated, is being boosted, is gaining is stronger. So unemployment around 0.7% lower, so improved. It was no 1% lower. Sorry, 6.5% it was. Unemployment was in January, so detected by 1% down to 5.5% in February. Participation rate slightly improved as well, but beat expectations. Okay, can see a revised higher for the capacity utilization. 336,000 jobs in February, double, more than double of what was expected. So a very strong, solid report out of Canada, and the market, it looks like it has reacted properly on these results by boosting the Canadian dollar against the US dollar. That's why we've seen this dip lower. So let's zoom out a bit. So this is a 30 minutes chart, breaking the support of the day, extending Bollinger's fast moving averages drifted lower and still pointing to the downside. MACD provides a bearish signal as well. Stochastic the same, RSI the same, with both. I'm not showing you that. Oh, sorry. Let me get back to the dollar cut. Here we are, dear Daniel. Dollar cut down, break support of the day. As I was saying, it was a positive It was a really solid report, so that explains why Canadian dollar got a boost. So 127.22 for the time being. Momentum indicator, so MACD provides bearish signal. Stochastic and RSI the same, and they both have further steam to the downside as well. Fast moving average is still pointing lower, so there is that comes in line, the reaction comes in line with the data. So if we trying to figure out the next possible support levels of the asset, then let me just, oops, broken, and okay. So already broken, also move below the 20-day moving average as well. Let me put my Fibonacci levels on. So the 61.8 Fibonacci level remains intact. So the next immediate support level comes around 20 pips lower. So at 127, round number anyway. So yeah, that's a key support level for dollar CAD, immediate support level for dollar CAD, while a break of it could actually brings back to focus the 126. Actually, let me be precise. So it needs to be, let me amend the Fibonacci adding to the at, oh, sorry guys, not point 886, 886. Let's see where it's 88. Okay, so here it is, down to, okay, so next support levels 127, 126.70, and the bottom of our Bollingers at 126.20. But have in mind that the daily chart, according to the daily chart, and with the flattening of our Bollingers, the overall, the medium term outlook for dollar CAD looks getting into consolidation. Intraday, however, as we have seen, data helped Canadian dollar, and as I just demonstrated, the next support levels are the 127 and 126.70. Let me use also ATR. It's my ATR. Here it is. Let's see what the ATR is telling us. Not 18 pips lower implies, so that satisfies that 127 level that I mentioned earlier. While the daily ATR is at 0.0108, so that will be somewhere down to, come on,
Katyan's over 100, moved over 100%.
126, 120, yeah, 126.70. That's good. Okay, perfect. So, yeah, Aussie CAD, of course. Yeah. So three black. No, it's not a black. Aussie CAD. That is Ateni. Yeah. So, okay, 1 hour chart. Let's start with it. Further decline. It has been to the downside. I mean, it was pretty. Oh, okay. Oh, as you're just informing, the biggest mover right so far today is the last hour. Is just for the whole for today's CAD yen. So it's a pretty volatile asset anyway. So okay, let's have a look on the CAD yen before we get back to the Aussie CAD. So CAD yen. So it's one of the biggest movers so far today, guys, with a more than 1% decline, as I can see my MT for right now. Can you see this information? It's on the left hand side over here on the market watch. So 1%, more than 1% rally for CAD yen. So far today, it has broken on the release. It has broken the 91.60 resistance level, and actually is currently a breath away from 92 level. So 92 level is turning us back to March highs, that peak that we have seen on the 3rd of March. So just last week, while the momentum is turning, is increasing to the upside. So the 3rd of March peak at, let me just be precise, 91.96 is actually it has already breached. So that brings the January, the year's highs, as our next immediate resistance level, which is just another 15 pips higher. 92.15 is the year's peak, and the immediate resistance level for CAD yen, just since it has already breached but not broken yet the March peak at 91.96. So it's just 2 pips away. So really sharp rally from CAD yen. Doesn't look to run out of steam, to be honest, yet. You can see that the fast moving average flattened a bit, consolidated ahead of the US Open, but that boost refreshed and added to the positive sentiment, intraday sentiment for the asset. So it's a really, really strong candle, even though we have another 15 minutes until it closes. But yeah, so that was on the strong cat, but also it has been due to the really, really weak yen since yesterday, since Wednesday, I should be precise. So yeah, 92.15 is the next immediate resistance level, while a break of it could turn into a tension October 2021 highs. To the flip side now, I turned back. Let me just. Here we are. That's 3 days boost. It turned back below the 91 level, which is just below the 23%. It could signal a potential reversal, but that's currently the asset is well above that level. So. Okay, let's get back to Aussie cat. Here we are. Just refresh a bit. Let me see whether there's anything new. No. Canadian employment. Okay, Aussie cat. Perfect. Okay. Reversing the whole week's gains just today back to 93.13. So it has, like, this rally has stalled a bit, but as you might, okay, let me just put my Fibonacci's as usual. So reverting back more than 40% of months gains, of 1 month's gains, but still a lot of positive sentiment, a lot of positive momentum, suggesting that this looks to be looks to be still a correction and not a confirmed reversal. So we need to see a turn back to below 93, or more precisely below 92.50. Let me find where the 50% is. Yeah, below 93, in order to imply that that might be this pullback, this at the end of the week might be the beginning of a reversal. But yeah, momentum is really really strong. So for the timing, this looks a bit this looks unlikely, considering also the expectations that oil could appreciate even further. So yeah, it looks a bit uncertain and unlikely. So for the, I will just try to analyze in the intraday basis, my dear Iomide. So down broken, my latest down fractals, my immediate down fractals. Bollinger's, as you can see, this 4 hour chart expanding lower. So that brings us our next immediate support level, the 92, not 93, sorry, 93 territory, round number, around 15 pips lower. So now that is our immediate support level, while the resistance lies on the latest peak, which is at 93.55. If I zoom in further to the 1 hour chart, that is even the picture is a bit clearer. So resistance on the potential reversal higher comes at 92.50, that double top over here, and also our previous low fractals, while to the downside, support can be seen at the 50% retracement of the last month. Okay, and if we just need some really short, let me just, so, oops, sorry, that Fibonacci that here, oops. Let me put the Fibonacci expansion correctly. Here we are. So 161 already breached. 90, not 93 is our very next one. And the next support lies down another 15 pips lower at 0.9250. So that was in regards to the 30-minute chart. Of course, by applying your tools in shorter time frames such as 30-minute charts and etc., you can identify closer support levels if you are a scalper or trading within a really strong time, a really short time frame. Sorry, so yeah. Euro dollar by Emma. Okay. Euro dollar. Here we are. So euro. I think euro has been used to. It was actually one of the strongest currencies so far today. Of course, before the Canadian data, before the US Open. So what we are seeing over here, euro. Let me just, euro dollar. Okay. So we've seen euro actually turning back below the 110 level. Okay, since that has been since yesterday after the statement of Ms. Lagarde, but consolidating since then. So because maybe because of the end of the week as well, is it remains intraday neutral. So you can see that it has pretty much stuck within the 109.50 and 110.40 territory since yesterday afternoon, consolidating. You can see the fact that it's consolidating by observing the Bollingers as well. You can see that they have flattened and they are really, really, really narrow, something that implies indecision. Okay, so if I just use the tied Fibonacci Bollinger Band area. So here we are. Okay, Come on. Okay. This could be this could the Bolligers, especially the 1 hour and 30 minute chart, could be used as our immediate support and resistance level, since the asset is pretty much bouncing between these two levels since yesterday afternoon. So um, anyway, fundamental from a fundamental perspective, the euro is expected to remain under pressure, not solely by considering that the Fed will probably announce a rate hike by 25 points next week, but also from the fact that the ECB hasn't changed its stance and has further is announced that they will continue the net asset purchase by third of or by the third quarter, by the end of the third quarter, but also by considering Europe's exposure to the war. Okay, it's dependent by 60% of the Russian oil, so that why fundamentally the euro could not be seen recovering anytime soon. So you can see this is the daily chart. You can see that is well off of the years, actually since November 2021 is well below, is well off the highs, is down to levels that we have not seen since the pandemic started. So it's back to um, the levels that the low levels that we have seen in the first quarter of 2020, so down to 108. So I remind you that this week it has managed to retest and actually to uh, post a low at 108.05 level. So yeah, decline and downtrend is still on and actually reinforced as well. So you can see that there is another bearish crossing in MACD in this weekly chart. RSI fell to get above 50, stochastic the same. So overall outlook for euro remains negative. So yeah, but intraday, if you're asking me, intraday EMA is consolidating. So immediate support and resistance levels stands at 109.50 and 10.15 levels. So yeah, consolidating. This might continue unless if it breaks anytime soon. Any of these two immediate support and resistance levels or sell resistance levels. So Dow Jones, of course. Dow Jones USA 30. That's DAX. Where's my USA 30? Mhm. And here we are. Sorry. So, okay. Okay, DRMA. So after the appreciation that we've seen since yesterday, the appreciation that we've seen in the beginning of the day, we have a pullback. Okay. Hmm. So yeah, we have a pullback the last 2 hours down to, so returning back to the mid of the 33,000 area. However, um, for the time being, there is not a clear bearish sign intraday, at least in this 1 hour chart for the Dow Jones. So have you seen that the fast moving averages have flattened, implying a possibility of consolidation from now onwards. This pullback might be ahead of the Biden or something. Not really sure, but there is not. This is a mixed chart, and why is that? Because fast MAs are flat, implying consolidation. Um, MACD is positive, okay? RSI and stochastic have turned lower, but they remain above the neutral zone. So you can see that that is not really a confirmation for a pullback yet, even though it's nearly, it has managed to turn 50% of this last hourly candle. So let's put some lines on. Let's check a bit what's going on over here. So turn more than 60% of the last hour gains. So a key, actually an interesting support level just for the next few minutes, hours, who knows, is the 33,342. That's our latest up fractal. So a break of it could retest the 20 period moving average, okay? So, but yeah, the momentum is a bit mixed, so doesn't present whether this pullback will last or not. It looks a bit limited for the time being. So overall, as I show you that on the beginning of our session, equity market, US equity market remains under pressure. It has been under pressure since the December last year, December 2021. A bit corrections due to the earning releases on January and etc., but remains in a downtrend. So if I just try to provide some barriers for you guys, you can see that in the if we are gonna analyze this in the medium term, we could see resistance a 20-day moving average, a quite crucial resistance, and the very next one would be at the top of the trend line, at the top trend line, which currently lies at 34 500, yes, while to the downside, and the immediate support level is down to 32,400. The very next one is at the bottom of our channel at 31,800. So yeah, currently is really consolidating at the mid of the trend, at the mid of the channel. So, but momentum is really is increasingly negative. So MACD negatively configured, strongly negatively configured. So overall momentum remains, overall outlook remains negative for Dow Jones and for the US indices in general. Not a lot of interaction today. I have another question for gold, but that's pretty much it. So let's see gold once again then. So as I mentioned earlier, has lost momentum on the US inflation release, but also today on this. How can I say that risk that risk appetite jump that we have seen following Putin's headlines. So turn the gold down to 1960. So the next key support is down to 1940. Okay, but the but in order for the gold to the positive picture, the positive outlook of gold to turn, to reverse, we need to see a break below the 20-day moving average, which coincides with the 50% Fibonacci level and is down to 19, let me be precise, 1925. Okay, 1925. Only a move below that level could reverse, could signal the reversal of this nearly 3 months rally. Actually, 2 months rally to be precise. 2 months rally. Yeah. So it might be also the fact that it's a Friday, is the end of the week. So, and also what we mentioned earlier in regards to some positive headlines that have have that, or profit taking as well. Let's not forget that is Friday. That explains this reversal on gold. But as long as um, we don't have a solution in the Ukraine, then gold could continue to the upside. As long as this is solved, theoretically, as I mentioned, the Fed's aggressive stance and the expectations of further uh, rate hikes uh, um, could weigh on gold. Okay, so and it will be an interesting week ahead for sure, because we know that the Fed will increase by 25 points if we don't have any surprises. But on the other side, something that should wait on the gold. But on the other side, we have the geopolitics that um, support commodities, and especially safe havens such as non-yielding assets such as gold. So it would be a very very interesting week ahead. So guys, if you don't have any further questions, I will call it a date. There are no comments in Facebook. I've replied to your questions in YouTube. So let me scan a bit to see whether there is anything in the headlines that I have missed, just to make sure. Dollar CAD, actually Canadian dollar, continues um, to rally, right? So uh, obviously due to the strong employment report. So yeah, this is it. So let's see whether putting positive shifts are actually um, keep the risk appetite in the market as we move into the weekend. So and let's see what Biden has to say in an hour from now. So that is something that could add some volatility to the market, depending on what he will actually say. So yeah, thank you very much. You're welcome, Captain. So thank you very much for attending. Hope you have a great day ahead. Take care. Let's not forget that it's Friday, so a lot of repositioning, closing position in order to reposition for the new week. So keep yourself up to date with the news, and I'll see you again next week. Okay. Thank you guys. Have a great